Well, I think markets were positively surprised by the Fed's move, in part because recent staff papers from the Fed had argued tariffs would actually be multi-year inflationary effects. So Fed Chair Powell's comments yesterday, I think, did catch a lot of folks by surprise, just because it is a view that markets probably want to hear, that they'd like to hear that the Fed is viewing tariffs as possibly transitory, because that puts them in a position to actually intervene if labor markets start to weaken. And in fact, that's evident in the SEP, because 90% of Fed staffers now see not only risk to growth, the GDP growth forecast, but it was 90% seeing it as downside risk.
The stock market is in turmoil. Uncertainty is gripping investors as we witness one of the most intense sell-offs in months. Every bounce seems like a trap. Every rally fades into more selling. Fear is widespread. Are we in for a prolonged downturn, or is this just another shakeout before the next big move higher? With inflation fears persisting, interest rates holding at restrictive levels, and now looming concerns over new tariffs, the market has been reacting with panic. Investors are on edge, worried about what lies ahead. Some are sitting on the sidelines, holding cash, waiting for clarity. Others are scrambling for answers, looking for the right moves in these uncertain times. But what if I told you that this fear, this relentless selling, might actually be setting up one of the best buying opportunities of the year? Legendary market strategist Tom Lee, known for his bold yet accurate calls, believes we are approaching a market bottom. His analysis suggests that despite the negative headlines, the Federal Reserve remains in a position to support the economy. Market sentiment has become excessively bearish, and technical indicators are signaling a major reversal could be near. So where does the market go from here? And more importantly, which stocks will benefit the most when the rally kicks in? In this video, we'll dive deep into 3 stocks with strong fundamentals and explosive upside potential. One of them just crushed earnings expectations, delivering results that could send it soaring once the market stabilizes. If we've truly bottomed, these 3 stocks could skyrocket in the coming weeks. First on the list, Micron Technology Inc. MU. When we talk about companies at the heart of the AI revolution, we often hear about NVIDIA, AMD, or Intel. But Micron Technology is another silent giant that's quietly making waves. If you think the AI boom is just hype, Micron's latest Q2 earnings report proves otherwise. This isn't just another semiconductor company. Micron is becoming the undisputed leader in high bandwidth memory, HBM, a critical component in the AI-driven future. Micron's numbers speak for themselves. In its latest quarter, the company posted a massive 38.3% revenue growth and a 50% sequential increase in HBM sales, setting a new record in the company's history. That's not just strong growth, it's industry-leading. But here's the real kicker. Micron is the only US-based company pushing the boundaries of HBM technology, and they're making aggressive moves to dominate this market. The company isn't just riding the AI wave, it's positioning itself at the core of AI infrastructure. Micron is investing $14 billion in CapEx this year, primarily to expand its HBM manufacturing capabilities. With AI-driven demand skyrocketing, their products will power the most advanced AI chips, from HBM3E to next-gen DRAM. They're building new fabs in Idaho and an HBM packaging facility in Singapore, ensuring they have the supply to meet surging demand. And let's not forget the outlook. Micron is guiding for $0.88 billion in revenue for Q3 FY 2025, a stunning 38.2% year-over-year growth. This isn't just a short-term spike. AI computing is here to stay, and Micron's backlog is already pre-sold to the biggest chip makers in the world. If the market has truly bottomed and a rally is about to begin, Micron is perfectly positioned for a massive breakout. With explosive demand, strong fundamentals, and industry dominance, this stock could skyrocket in the coming months. Next up is a stock that stands out as an absolute no-brainer in the current market sell-off, and that's Amazon.com Inc., ticker AMZN. This isn't just another e-commerce giant. It's a dominant force in AI, cloud computing, automation, and digital advertising. And right now, after the recent pullback, Amazon is trading at a valuation we haven't seen in years, making it one of the most attractive opportunities in large-cap tech. Let's break it down. Amazon Web Services, AWS, is the cash printing machine behind Amazon's empire. Despite all the concerns about an AI bubble bursting, the reality is that AI infrastructure spending is only getting bigger, and AWS remains the undisputed leader in cloud computing. AI workloads need high-performance cloud solutions, and Amazon is capitalizing on this shift by integrating AI-driven efficiencies into its cloud services. But AWS is just one pillar of Amazon's growth story. The company has also quietly built a digital advertising empire, generating billions in high-margin ad revenue. And let's not forget Amazon Prime, which locks in over 200 million subscribers worldwide, ensuring a steady stream of recurring revenue. The biggest transformation, however, is happening in Amazon's core e-commerce and logistics business. With advancements in AI and robotics, Amazon is becoming more efficient than ever. The company is streamlining operations, cutting costs, and even reducing workforce dependency, which could lead to billions in savings over the next few years. And here's what makes Amazon especially exciting right now: the valuation. After the sell-off, Amazon stock is trading at a forward PE of just 36, something unheard of for a company with this level of dominance. Historically, every time Amazon has traded at this kind of valuation, it has led to explosive long-term gain. Technically, Amazon is showing signs of a powerful reversal, with indicators pointing toward a major bounce. If this is truly the market bottom, Amazon is set to skyrocket, driven by its AI expansion, growing ad business, and unstoppable e-commerce dominance. Finally, we have NVIDIA Corporation, ticker NVDA, a company that stands above all others. This isn't just a semiconductor company anymore. NVIDIA has become the foundation of the AI revolution. And despite recent market volatility, its growth story is far from over. In fact, this pullback is shaping up to be one of the best buying opportunities in years. The recent sell-off in NVIDIA's stock wasn't due to weakness in its business. It was triggered by trade tensions and broader market fears. But here's the reality: NVIDIA's core business remains stronger than ever. The company just guided for an astonishing 65% year-over-year revenue growth for Q1 FY26. And that's just the beginning. The biggest driver? The massive demand for Blackwell GPUs, which are now ramping up production and are already in short supply. Let's talk market dominance. NVIDIA holds an unmatched 90% market share in AI GPUs, leaving competitors like AMD and Intel struggling to catch up. Hyperscalers, data centers, and AI developers simply cannot operate without NVIDIA's chips. The company's latest Blackwell GPUs are set to power the next wave of AI innovation, from training large language models to building AI-powered data centers and AI factories. But there's more. NVIDIA isn't just growing, it's printing cash at an unprecedented rate. Last year alone, it generated $6.7 billion in free cash flow, a significant portion of which is being returned to investors through stock buybacks. And even with its dominance, the stock is now trading at just 21x forward earnings, a 20% discount to its historical valuation. Every time NVIDIA has been undervalued like this, it has led to a massive rally. AI spending isn't slowing down, it's accelerating. Companies worldwide are rushing to build AI models, invest in AI infrastructure, and deploy next-gen automation, and NVIDIA is sitting right at the center of it all. If this market correction is truly a buying opportunity, then NVIDIA isn't just a strong pick, it's a must-own stock for the AI revolution. The market may be in chaos right now, but great investors see opportunity where others see fear. Micron, Amazon, and NVIDIA represent three of the strongest plays for the next leg up. If history is any guide, the biggest gains come when sentiment is at its worst. So, what's your move? Will you wait on the sidelines or position yourself for the rebound? Drop a comment below. Let us know which of these stocks you're watching. And if you found this analysis valuable, smash that like button and subscribe for more high-conviction stock picks.